Hey, what's going on, everybody? In this video, I'm going to show you how you essentially profit while you sleep. If you haven't figured it out, it's by credit spreads, which in layman's terms, it's you're getting paid for time. You enter position and your value in your position goes up as time decays. If you haven't seen my first video that I've done on this style of trade, this link right there that's popping up, should have popped up about now, that will take you to my original video that I did a few months ago, and that shows you the type of chart patterns I'm looking for, the pros and cons of each chart pattern, how the strike prices is chosen, things of that nature. In this video, I'm going to show you how I take those strategies and turn it into, or basically how to employ those strategies to obtain your daily, weekly, and monthly goals, and essentially yearly. So how did I come up with this way? I started off as a trader, as a day trader, and day trading, you have a daily goal, like a daily profit goal, right? So I wanted to find a way where I can meet my daily goal, but I'm not able to day trade right now. I currently have spotty internet. It drops all the time. It's unreliable. I could own 10,000 shares of Tesla and the internet drop, and then you're in for a heck of a ride once it finally turns back on. So that being said, I wanted to find a way to where I could still reach my $300 a day goal, which is $1,500 a week, and not have to rely on day trading, but still be able to obtain it. So, like I said, a daily goal of $300 a day, which is $72,000 a year. And I was trying to figure out how to do it. So, did that with credit spreads. If you're not familiar with credit spreads, there are tons of videos all over YouTube on what they are and how they work. The only difference is your expiration dates, your strikes chosen in relation to the stock, and how you manage them. That's technically the only difference. In the end, a credit spread is just you're short a position and you're offsetting it with a long position. So how do you make your 300 a day goal using credit spreads? So this is how I do it. So say today's Monday. I have no positions. In between Monday and Wednesday, I am looking for setups that will expire the following week that will have the potential to bring in a credit of at least $300. And so therefore I set up five positions that expire the following week, and they have to be the same high probability chart patterns and setups that are in that first video that I provided a link for. Lost my train of thought there. So yes, I would start 5 positions that expire the following week. So you have theta and all that working in your direction, and if the stock is moving in your direction, the gamma is working in your favor as well. And therefore, if you hit your goal, then they're high probability, so you made $300 a day. Basically what's happening is I'm entering them Monday through Wednesday, and by Monday, Tuesday the next week, they're already hitting my profit of 80% of the credit received, and I close them and look for the next ones and just keep rolling it like that. And that's all I've been doing. Right now, I'm going to show you how I've done for the month of February, these last 2 weeks. I'll go over the profit loss amount made, how I'm doing it, go over the trades and how I did it. And also, I just started a Facebook group to where we can share these kind of trades, or you can ask questions, or basically get in touch with anything. We could all share ideas, talk, whatever. It's a free group. I'll put the link in the description below. Don't forget to subscribe, like, comment your question, whatever. And yeah, so let's dig in and see how I've been doing. Okay, here we are on my TraderVue account. If you're not familiar with TraderVue, it is a online trading journal that you can use. You upload your trading statements and it plots it all for you. And you'll see how I use it. It pulls up a chart for you to show when you enter and exit, and it does everything. It allows you to really break down your trades to see what your strengths and weaknesses are. So here we are in the month of February, and the 2 weeks in, you see 4 green days, 1 red day. In week number 1, I had 2,195. Oops. Let's try that again. $2,195 in profit, and then in week 2, I only have 1,556. Sorry about the poor handwriting. That's the best I got. So, anyways, that comes to a total of 3,751 for the month of February. So far, we still have 2 weeks left to go. It'd be nice to knock out another 3,000 or 4,000, but we'll see what the markets give us. But that is what it looks like right now. And now we could go ahead and see the reports here. So another thing TraderVue does is they'll even bring up your statistics, which is nice. So you see what you're good at, like I said earlier. So like I said, so far 3,751. Average daily gain is 535. And average winning trade is 368. And 1 loss of 306. Out of my 12 trades, I have 11 winners, 1 loser. And I hold my average winning trade for 6 days, and my one losing trade was only held for 4 days long. Right here you can see the top 20 performers for that time frame, and I'll go over these trades here in a minute. But it's nice you can see what you're doing decent at. There it is. So you can also go to your recent. So this is one thing I'm going to show. It's nice to see. You can see your gross cumulative P&L for the last 30 days. So for this year, I placed my first trade like this on January 29th, and you see it's just done a nice steady run up. Hopefully it continues. Alright, now to the trades. Alright, so if I scroll down, you can see the number of trades I've placed. I did it on NVIDIA, CRM. They're all roughly 300 or more trades. This Roku, this was Iron Condor. Another 300, another 300, 300, 300. So you can see you can pretty consistently bring in $300 a trade. I did have 1 loss. They don't always all work out, but you can see right here, LVS, I lost 306. We can check it out here. So when I entered, right here, I expected price to go up. Right there, hit resistance, it gapped down. I was expecting it to come further down, but that did not happen. Especially with this overall bullish market that's going on right now. So like I said, I was expecting it to go further down, and I'll use this example on how you place and how I choose my strikes. Like I said, it is in that other video that I shared at the beginning of this video, but here's an example. So it went up, hit some resistance, gap down, and started to sell off. So my thought process is sell a strike at or near resistance, and then buy your hedging option up there, and then just let it, which would be a call. So I bought the 69.73 fair call spread, I believe, and I was expecting to come down. Because if you look at it, that's a high probability trade. It will more than likely do that. But in this case, it obviously didn't. Like I said, I stopped out. And here's what's cool about it is you can, the plots where you entered. So came up, hit that resistance, right? Gap down. These triangles right here indicate the day I entered. And I stopped out on this day whenever I tested my short strike. And obviously it gapped up and kept going. So anyways, stopped out and moved on. But it's cool, you can go back and see what was working or wasn't. See, this support didn't hold, so it's good to always honor your stops. And right here, this is where it shows your executions. So you upload it and it plots it all for you. And I'm not sure if I said it, but in the description box below, underneath the Facebook group that I'm going to put in this video, or the link to that Facebook group, I'm also going to add a link to TraderVue. If you want to try it out, you can click that link and you get $10 off your first month. This particular option I'm using, they have 3 different options you can choose from. I believe this one is gold, the highest one, because it does the options. But you get $10 off. I believe it is $50. If you use that, you'll get $10 off your first month. Alright, and so I'll go into the trades I have for this month. So, or sorry, for this week. These were supposed to expire the following week. So right here, it is, so I entered them on Monday, Tuesday, and Wednesday, expecting to get out of them this week. But sometimes your targets get hit early because it's moving in your direction, which is the case right here. So these are the ones I was wanting to expire next week. But you can see I already have 3 that have hit their targets of 80% and closed. So I close all my trades at 80% of the credit received and roll it out to the next one. So I'll review these and we can go into depth. Okay, so this one, Facebook was downgraded by an analyst. The stock came down to two-way support, then bounced, and I was expecting the 50 SMA to hold price up, which was at 209.24, and the stop is at a close below 207. So you see on, actually before I go here, right, you see I closed, or sorry, I didn't close, but I sold the 207.50 put and hedged it with the 202.50 put, and I brought in a total of $1.40 of credit. And on the day chart, so right here, once again, these triangles indicate when I entered, it gapped down. My stop was at 207. I closed below it. As an end, so far it's going up in my direction. This one will be a solid $840 winner if it continues in my direction. And so in that particular one, it gapped down. So what I look for in these is it's overall trending higher, and then it gaps down. And so that when I see a gap down like that and I see support hold, it makes me believe that it may continue. Buyers will step back in and buy it up. So if you go to the 5-minute chart, And I was waiting for VWAP to be reclaimed, which was this purple line. And once it closed above it, that's when I entered. A stop was closed below 207. And you can see right here, it tapped it there and tapped it there and tapped it there. But support was holding. Buyers kept on coming in and holding it up. So I was comfortable with holding the position. And if you look at it now, it's obviously going higher. And hopefully it continues in that direction. And ultimately what this means also is as long as it stays, like doing these kind of trades, you don't need to decide or essentially make a bet where the stock price is going to go. You just have to place a bet where you think it won't go. So as long as it doesn't go below 207, I am going to be profitable. As long as it doesn't turn back around, it doesn't matter if it comes back down some or up a little bit or sideways. It'll be profitable because I just need it to stay above that price. So that one's still working. And Visa, this one closed on Friday. And same thing on the 5-minute chart on the day. It came down and it come back around. I'll show it up on the. Now, so right here's your typical bull flag pattern. And this is a very common pattern. So right here, this trend line gapped up above it, came down, tested it, started to be bought back up. Once I saw it was being bought up again, I sold the 202.50 puts and hedged it with the 197.50 puts. So I use the moving averages a lot as a stop area. So basically I am expecting, as you notice right here, it hits the 20 SMA bounces, 20 SMA bounces, 20 SMA bounces, bounces. So I'm expecting this level to hold price up. So I sold slightly below it, which would be the 202.50. So I'm expecting price to stay up above until actually the next week. That is, I would do it then. As if you look at it, and here's what actually happens. It closed on Friday. So here is that trend line. It continued higher after it broke, and then it just held it up. Like, that's how simple it is. You really don't have to make it overly complicated. And once you enter, you just manage the position. I put out a target order of 80%. I closed it at 15 cents, and then this brought in 60 cents in. So yeah, I entered on the 11th and closed on the 14th. So I was in this trade for 3 days. So you don't always have to hold them the entire time. Adobe. This one I sold. I'll go over my charts in a minute, but I sold the 360, bought the 355, and I brought in a total of 73 cents of credit. So right here on the 30-minute chart, I waited for a pullback to the 21 SMA to enter the trade. So when I enter a trade, I take all the pictures, I can go back and review it. That's how I journal it. On the day chart, I have green 10x bars, which basically means the DMI is above 20 and the ADX positive is above the negative. That's all it means. It's just this way it's painted on the candles. So when they're a solid candle, that means they're red, and when they're hollow, it means they're an up candle. So Adobe, it gapped up. I was holding and curling up, so I sold the 360, which is below the support. So it gapped up. Gap is holding, so I'll sell right there and just write it up. I mean, nothing really else to say about it. It's almost kind of beating a dead horse. So I just was expecting this price to keep it up, and it did, like I said, and closed the position at 15 cents. So I brought in a total of 58 cents, and I was only in this position for right here. Entered on the 11th, closed on the 14th. So I was in it for 3 days as well. And all these trades were ones I wanted to expire next week. But targets were hit early, so I guess I get some bonus trades. All right, Costco. it is. Costco has your typical pattern. And for the short time frame, I was expecting the AMA to keep it up as well. And actually, before I talk about it, I should go over. I sold the 307.50 puts and hedged it with the 302.50 put, bringing in a total of 70 cents of credit. And this was held for 2 days. I entered on the 12th, exited on the 14th. So here we go. On this one, like I was expecting the 8 EMA to hold it up, hit it right there, and you can just see it kept it up. And I entered, like I said, that was the, what I said was the 307.50. So 307.50, when I entered, I was expecting that to hold. So my stop is, I entered right here. So as long as it stays above this line right there, I make money. That's how much wiggle room you get in this. So I don't know what to say other than there's a lot of buffer, if you will, some forgiveness in if you make the wrong direction or wrong choice in direction. Alright, last one is ACN. This one is still open, same as my Facebook one. This particular one, I shorted the 210 and hedged it with the 205 put. Just waiting for it to load. There it is. Okay, I was watching this before the market opened, and it gapped down when the overall market gapped down to the 21 EMA. So I was alright, so I want to buy the dip. Entered when the 5-minute candle closed above the 4 and 8 EMA. Once it was confirming it's going higher. Waited for a green buy arrow. Once again, this is what it looks like on the chart, and I sold the 210 again. And this one, once again, I was expecting the 20 SMA to hold price up. That's all I was expecting to do. So all I needed to do is to stay above 210. I'm also expecting this orange line, which is the 34 EMA, to hit it and potentially just hug it higher up until next week, especially starting next week because it is a 3-day weekend. So that's 3 free days of pay. So can't really complain about that. So that is how I do these type of trades. I just find a chart pattern. I sell outside of support or resistance. I go with the overall trend of the market, of the chart in the market, and just take profits at 80% of the credit received. And so, and now I gotta explain how is it that you are making money while you sleep. So in this particular case, in those examples I just showed you, the Facebook, Visa, Adobe, Cost, and ACN. All right, in those trades for Facebook, there is a potential for, actually, hold on 1 second. This will be, okay. These are the trades I just discussed and showed examples of that I was wanting to expire next week. So this right here is the credit received, credit received, credit received, credit received, credit received. And this is the price I closing for all for 15 cents. So it's all 80% of the credit received. And then so ACN and Facebook don't have a closed amount because they're still open. They haven't been filled yet. And the 10 days that I have typed over here is how long until the position expires. So you can see the average is 10 days out of these. And now this 840, 375, 365, 350, and 400 is the potential amount you can make on those positions in that time frame, as long as the stock price stays above your short strike. So as long as it stays above, you're okay. You're going to make money. That theta is going to decay into your account, and IV contraction, if that happens, that also gets goes into your account. So it's just like shorting a stock. You're shorting a position and you're covering it at a lower price. So anyway, so these prices, that your potential amount you can make, this is how you essentially are saying you make money while you sleep. So you add them together and they equal $2,330. Since the average is 10 days hold, you divide that by 10 days, that is approximately $233 a day you can make if you hold it to the expiration. And as I showed you in those examples, these three right here have already closed. So essentially I made more money on some days because those positions already closed. So that being said, that is how you make money while you sleep. You just place those positions and let time work in your favor. You use the chart patterns that I have in that first video that I showed at the beginning. And that is it. And then so now you just keep rolling it out to the next week. And you have the chart pattern in your favor for a high probability. You're selling an out of the money option, which is a higher probability. I believe it is 86% or something like that of options expire worthless. So that's in your favor. You're going with the trend that's in your favor. So this is a lot of high probability positions. And then I know a lot of people say in this type of trading is, yes, your max loss is definitely more than the amount you could win. So people say your risk to reward is skewed. That is true, but you also don't have to hold the position for a max loss. That's why you have a stop loss level. If that stop loss level is hit, you get out. It's no different, or this is how I view it anyways. It's no different if you're swing trading stocks. If you're going to buy 1,000 shares of Facebook, which is, I don't even remember how much, we'll say it's $200. Say if you buy 1,000 shares at $200, you have $200,000 tied up into that trade, but you have a stop at $1. But you're only going to make so much going upward, or if it moves up, that's the same thing. You have the same risk at this time. You have a higher probability of being profitable, and you don't have to let it go to zero. So that's how I view. That's how I think this is probable cause to be able to use these type of positions in order to have high probability trades whenever it is skewed a little bit more, that you could have a greater risk. Your only risk really is a gap risk, and it is possible it will happen, but that's also why you got to be hedged. Always have hedge positions. Now, I believe that is all I have for this. If you have any questions, leave a comment below, subscribe. Like I said probably 3 or 4 times, if you haven't seen that first video that I shared the link at the beginning, in that video I show chart patterns, the pros and cons of the chart patterns, the characteristics of the chart patterns, how I choose my strikes, where my stop losses are, when I get out. I break it all down right there, so go ahead and check that out. Also, go ahead and join the K.AshCapital Facebook group. I'm going to be sharing ideas in there. You can communicate with me there as well. And I'll be available to answer questions, anything like that. So, like I said, thank you very much for watching. Take care. Have an awesome day.